Warren Buffett always says, price is what you pay, value is what you get. So when I talk about investment opportunities and when I get excited about investment opportunities, it's when I get more value for the money that I'm paying. So today I'm talking about Plurilock Security, which is a company I recently introduced on this YouTube channel. I'm interviewing the CFO, but why am I talking about it? Well, because what I get for Plurilock is last year's revenues were $70 million. The margins are expanding. The company is in a cybersecurity space, which is growing. And the price that I'm paying is about $14 million today. That's why I'm excited. And that's why I'm excited to talk with Scott, who's the CFO. Thanks, Scott, for joining me.
Thank you, Mariusz.
Okay, so Plurilock is a small company in relation to some of its publicly traded competitors. And you recently joined the company. So let's talk about how did you hear about the company? What makes you want to join? And let's start with that.
Perfect. Yeah, I actually heard about the company through a recruiter, believe it or not. It wasn't on my radar as a small cap in Canada. And then I said, I'm going to look into this. Found out that the company was doing cybersecurity in a small and growing space. They've done a few acquisitions before my time. Looked like they had a lot of assets and a lot of momentum, as well as looked like they had a great management team. And then had the opportunity to talk to them and the board, some fantastic people as well on the board, and looked like a great place there. I could add a lot of impact, a lot of opportunity, but also a good set of people. So that was my introduction into Plurilock.
And when exactly did you join officially?
June 5th of last year. So it's actually been over a year now. That time has flew.
Okay, and when I talk with Ian Patterson, he always praises you about how he's happy to have you since you came in. You did you integrated the acquisitions that the company did. You saved the company some money, and as a CFO, I mean, I don't think of a CFO as a acquisition. That does something like this with acquisitions, integrating acquisitions. So, like, I mean, what is your background to be able to do that kind of thing?
So I've had, I guess, the luck or opportunity to work in large and mid-cap companies. When I say large, I mean billions of dollars revenue company. And really there was a lot of opportunity they were acquisitive, and there was a lot of opportunity to just understand how you want to take a business that's operating in one way and put it into the overall structure that's settled. I would say Plurilock acquired quickly and actually needed to build that structure of what do we look like, what's our cadences, what systems and tools are we using, how are we getting information, how do we work well together. So there's a lot of opportunity there. I wish I could tell you, Mariusz, today I'm done. There's no more to do there, but there's always going to be work there. So we're constantly working on how we can improve and make things better on an operational standpoint. It was very, like I said, very lucky to have that opportunity in early in my career that I was able to bring here.
Okay, but so when you look at an acquisition, I'm thinking of myself. I'm looking at an acquisition, and I might buy it based on certain financial metric, certain EBITDA, and then when I integrate it into my own company, I might see some repetitive expenses, and if I take those expenses out, then I'm actually getting something at a better multiple. Is this how you look at it?
That's definitely part of it. So you also need to look at the team, the customers, how well they're doing overall. So if you take one of our acquisitions like Atreon, I think that was a great acquisition. They have a good team in place, and it was merely a fact that the owner, I think, was just looking to move on with his retirement, and maybe he would have kept going. But I think for us, it was great that we had that opportunity. And then, of course, yes, there's certain things when you have a bigger organization you can do and manage. A lot of times back offices, especially in smaller companies, aren't as efficient. So you can either upskill the team that they have or get the right people into place, and also get some economies of scale. And that, like you say, gets more value from your acquisition, or synergies is usually it's called.
Now, the acquisition targets, do Plurilock, part of your business is in the VAR business, value-added reseller. So the companies that you acquired, correct me if I'm wrong, they were mostly in the VAR business. They didn't really offer any critical services. Am I right?
I would say yes, that's correct. Mostly value-added reselling. There was some service offers that they did, and I would say we've combined those together, and then the critical services offer, we've added and expanded a lot of key capabilities with that as well. The VARs were, I think, like the first step of services, and we've definitely moved past that pretty rapidly this year.
Before you joined, were you in the cybersecurity space?
I was not. So most I knew about cybersecurity was, don't share your passwords, and no, I'm kind of kidding a little bit there, but I have not done cybersecurity before here, so it was definitely a very fast learning opportunity to learn. That said, now that I've been here for a year, I love the space. I think there's a lot more we can do here. There's a lot of companies that have a lot of opportunity for us to help them, because we're seeing more threats. We're seeing just companies that have somewhat neglected how they operate. And I would say it's kind of like they've operated at the minimum kind of legal level. And now that those legalities and regulations are ramping up and causing, director liability, as well as your chance of getting your business shut down. I won't tell you, if you know where I live, like there was a very big business, and a few of my neighbors actually couldn't work for a couple of weeks. And this was a major company here in Canada that was just kind of shut down. And there's been a lot of those even this year. So I think the space itself can offer businesses a lot, and not just in the protection, but also we're seeing that we're helping them just operate their business on a day-to-day basis much better.
It seems like every day you hear something about a cybersecurity attack. But when you do hear those kinds of headlines,
Mhm.
do they like help you? Do businesses reach out to you because of these various attacks?
What I would say is we're a smaller company. I think though that said, I alluded to the board and our connections here. We've good access to customers through that level. The level sales we're doing with critical services is what I would call C-level sales. It's at a higher level of the company that you're talking to. It's not just reselling engineering, and it's great that we have the reselling capabilities and those relationships, but we're also pretty adept at getting higher and higher in these firms. And the ones that I'm referring to that are our customers, and even the ones we're targeting, they're firms that you would think would be tech companies or have a high-end sophistication, but sometimes when you're doing manufacturing, you just don't have the luxury of updating your systems every 5-10 years even. And really what we can do is, one of the offers we've seen is able to get in, update their network infrastructure, update a lot of their backend databases, and make them way more secure. And there's a side effect that we also make them operationally just easier to manage. So they're more efficient overall.
On the acquisition front,
Mhm.
do you see in the future making more acquisitions?
It's never off the table. We are a small entrepreneurial company here in Canada. I think we definitely have our eyes on potential, what would fit, what wouldn't. And while I can't say anything kind of and predict the future, for sure we are looking for opportunities pretty much on a regular basis to see what we can add to the overall portfolio.
But what fits? What kind of characteristics does a company have to fit?
So I would say a good fit for us right now would be expanding our service capabilities. So that's something that I definitely keep my eye out for. If there is a company that can help us bolt on to critical services, or even a company that's doing reselling in a region that we're not too big in. I think that would horizontal integration would help us a lot on that side, and also give us a larger footprint and make us a even more sizable and force to be reckoned with.
Let's say I am a private owner of a cybersecurity company,
Mhm.
and we have a conversation. Somehow you have to sell me on the idea that, number one, it's a good idea to sell to you, and maybe if the transaction is swap of shares,
Mhm.
then be part of your story. Like, what's your pitch to them, to own private owners that you might want to acquire?
Yeah, so what I would say, Mariusz, is we're a larger platform than typically the targets we'd be looking at, or let's say even it was a company of similar size. I would say we're publicly listed. We have that muscle, we have that expertise. We also have a platform to plug into their business, and realistically, they'll be able to grow a heck of a lot faster in our ecosystem that we're building versus doing it on their own. On top of that, we have access to pretty significant access to high level people in our organization, and can tap a larger, broader customer base. So that would, that's why we're looking for, say, more capability. It's because we really want to run as fast as we can and grow this thing as quickly as possible.
Can you talk about the margins on your
Mhm.
business of various different businesses, and how the margins differ?
So I would split it out. I think the reason that we're going down this path of services is because the margins in there, I mean, it can be too specific, but any given job is between 30 and 65%, depending on urgency, need, what critical work needs to get done when. Um, and that's the services side, which is why we're expanding there as quickly as we can. Then you have the resell side, our typical resell to, say, blue chip companies or larger companies, that usually lands in 10 to 15% range. So we're putting together the packages and being almost like a consultant for them, but it's not as good margins as the service side. And then finally, we have a large chunk of federal business, which is low margin almost by design. It's highly competitive, as well as U.S. government has protections in place to make sure that they're paying the best price. Not sure it always happens, when you hear news stories, but that's I would say, being in that space, it happens quite often. And we're looking at expanding or keeping what we have, but expanding on the higher margin items for two reasons. One is to get our more cash flow, and then two, to make sure that we're creating more value for our shareholders over time.
Okay, so you have the resale business, that's a lower margin business, that's just hardware and software, but then the professional services is something more in addition to this, right? And that carries higher margins. Now,
Correct.
what types of clients are more inclined towards the professional or critical services? And I mean, is it more like the governmental that are more interested in the critical, or other types of businesses?
So right now we're targeting a certain segment. I don't want to get too specific because these clients, we need to protect their overall their privacy. And I would say they're large companies that you would easily recognize that have a need, and that need is they want to make sure that they're not at risk for cybersecurity attacks. They want to make sure they don't get shut down. They also want to make sure that their board isn't liable, or they're like leaking employee information. Um, that's very key, and we offer services to help them prevent from ever having that happen. And then the second piece is, like I said, it's also a happy byproduct or a positive externality that a lot of times their systems and processes get improved along the way, and they get more efficiencies. Then in terms of your question and getting back to the government side, absolutely, we will be targeting government. Right now, we're starting in the private B2B sector.
Okay, so my final question is on, EBITDA profitability. Uh, last year you did have 70 million of revenues, and as I said at the beginning, that compares to about 14 million market cap, which is very attractive. But then at the end of the day, revenues don't mean much unless they are profitable revenues. So can you talk about like your goals for that, and maybe some kind of timeline? And if you're not comfortable with that, that's okay. But let's talk about your goals for that profitability, EBITDA profitability, or adjusted EBITDA.
Right. So we're looking again to bolster our critical services business and move as fast as possible, because that's what we see as our number one driver of getting to profitability as soon as we can. Now, I say as soon as we can. I don't want to necessarily put a timeline on it. We typically don't give forward guidance because we have to be very careful with the markets and make sure we're not over promising and under delivering, and make sure that our we're being kind of even keeled about how we go about our business. The goal, though, is to get to EBITDA positive as soon as possible, as well as cash flow positive. We're doing a number of things. Last year, it started with cutting costs. We've had a chance to reorganize around this services business, which is producing margins. I think we've seen good results in Q1. Actually, I would say fantastic results, given what we've been able to do. There's a few other items we're looking at on the resale business in terms of volume, can give us more play with margin rebates, which has helped us as well. So there's a lot of levers we can pull, and even some of it's still doing minor cost optimizations. And this has been helping us move forward as quickly as we can to this EBITDA positive. I would like to see it somewhat, as a CFO, I want it as soon as possible. I wanted it yesterday, but I do see some encouraging signs in what we're seeing in the business and what we've delivered already in Q1, and keeping the trend going.
Okay. Do you have any final thoughts that you might want to share before we finish?
Well, first, Mary, just thanks for the opportunity here to jump here and have a conversation. Appreciate it. I think the reason why I'm here and why this is interesting is because we're a pretty energetic company that's growing in a space that's seems to only, unfortunately, be moving in one direction, and that's where security is becoming more and more critical to your overall business, and just making sure that you can actually operate without any interruptions. And I love the fact that we're helping companies avoid getting penalized for just existing in the world and being a target and doing good things. So it's a good space. It's something that has, I think, real meaning and value. And the other piece of it is there's definitely profit to be made here. So we're going as fast as we can to get there.